To our audience today, we have a special treat for you. Our guest today is a true Renaissance man with a wealth of experience and knowledge. He is a former United States Air Force member, a licensed real estate professional, a licensed trader, an author, lecturer, serial entrepreneur, and founder of the private equity firm, the Devereaux Group. Mr. Devereaux, thank you for joining me today.
Thank you, William, for that robust introduction. It's an honor to be here. Some of those accolades you listed are so old I barely remember myself having done them, but I thank you for allowing me on your platform.
The pleasure is all mine, and I hope to learn a great deal during this conversation and have our audience learn as well. Let's dig right in. Lately, you have been writing a lot about geopolitics and community wealth from a global perspective. Why the shift from a more Western view to one more concerning the diaspora populations of the global East and South?
William, it's just a natural progression and growth pattern. In the last few years, I have traveled extensively, which has led me to see the world through a far more complex prism. Also, being semi-retired now, I get to read a lot more and listen to some very erudite scholars like William Darity, Glenn Laurie, John McWhorter, and Lisa Cook. I've also been highly affected by scholars on the African continent like PLO Lumumba and Fortune Charambira.
As our talk progresses, should the audience consider that your views come from a Pan-Africanist view?
Quite the contrary, William. Lately, I'm finding that the needs, concerns, and strengths of the diaspora lie in the differences of the nationalities and ethnicities. Hitching all the respective wagons is not the right course of action. Being independent but loosely associated works better because it's much more challenging to stop a decentralized movement than one so closely connected and run from a central standpoint. For instance, all that disparate groups need to trade and do commerce is trust and mutual respect. They do not have to see themselves as related, kin, or brothers. Waiting for the moment when all in the diaspora and on the continent see each other as one is one of the significant downfalls of our predecessors. If I have a surplus of fish and you have a surplus of rice, that is all somebody should need to facilitate a successful trade deal. Now, if your daughter wants to marry my son, all the better. However, the relationship should be solidified, with our communal needs being the priority.
Understood and very well put. Was it during this time frame that you devised the energy exchange philosophy?
The energy exchange is not just a philosophy, it's a practical approach to life. My business partner, Byron Ferguson, and I are as responsible for its inception as anyone. We've taken principles and tenets that are not new or innovative separately and arranged them in a way that anyone can test a hypothesis easily. It's about making these concepts accessible and actionable for everyone.
Help me and our audience out here. How did you utilize philosophy in your life's journey?
Sure. The foundation of the philosophy begins with the four currencies. We believe that in life there are four currencies: time, relationships, information, and fiat, cash. I had been practicing using each of these currencies throughout my life, just as you and all your listeners have. However, it wasn't until I had thoroughly mastered these principles that my life made sense. I learned my time first by claiming ownership of it. I used that time to gather the best, most helpful information. Then I sought to build relationships with people with their cache of information, partner with them, and minimize my dependency on fiat or government-issued money. Then it all ties back. The less time I have to spend trading time for money or reducing my need for undetermined amounts of money, the more of my time I own, and ultimately, that is our philosophy. To control the one currency that is finite and whose possession we have the least amount of control over: time.
Wow! In that 45 seconds it took you to explain, I have been to a weekend of seminars and prosperity rallies. That's incredible.
Well, there is more to discuss. The energy exchange philosophy actually consists of 19 elements, each contributing to a comprehensive understanding of wealth and its creation. However, we have only discussed the first four today.
That's amazing, and I would love to hear more. Will these concepts be explained in your forthcoming books?
Absolutely. We have a series of volumes of books. The first volume is being edited for production as we speak. The Energy Exchange Volume 1. The four currencies will be out soon. Everything will be published under our publishing company, SLW Publishing, LLC, which we founded to ensure the integrity and quality of our publications.
I'm already looking forward to our next conversation, but for now, let's pivot to your thoughts on wealth building and the broader discussion of community wealth.
Absolutely. It's essential to break your question into its most basic elements, define or frame the topic, and go from there. 1. Before building wealth, you must determine what wealth is and why it's important enough to want to create. Wealth, as we define it, means more than money. Wealth implies an abundance of something valuable to us, and you can have many things: talent, information, and money. Most of us sell our talent, time, and knowledge for money. There is absolutely nothing wrong with that. However, that need not be the only way to accumulate wealth. In the energy exchange, wealth and healthy relationships, information, and time are just as significant and sometimes more so than money. So wealth should be seen as what you have of value, whether money or not, and how it can be leveraged or exchanged for its monetary equivalent if that's the goal. In this way, we can consider wealth worth building. What we don't find worth building is an accumulation of money to accumulate things and stuff. Even at a cursory glance, we can see that so-called gurus, coaches, and mentors teach and sell a specific technique to those with no money under the guise that money fixes all and cures all your ills. The other talking point is generational wealth. We can drill down on both. However, for our purpose, there is never any consideration for true happiness. No consideration that what we really should be passing on is the knowledge of how to attain happiness or satisfaction is not tied to the amount of money that someone hands down to future generations. For this reason, we tell our partners and clients to bring us whatever technique your guru sold you, and we will show you how to increase its effectiveness exponentially. Like most diets, most money-building techniques will work in a vacuum. If you consume fewer calories than you take in over a certain period, you will lose weight. That is a given, right? If you invest in any commodity, you will earn money. How much money will you gain or lose weight? And can you keep the money and not gain any more weight? In both scenarios, it comes down to the available information, the relationships you have cultivated, and the time you give to both endeavors. The energy exchange helps you nurture those relationships, mine for the most helpful information, and be more efficient with your time. Only then is building wealth worth it. Otherwise, we end up being that person who made a lot of money only to see it gone as quickly as we got it, or the person who loses weight to, unfortunately, gain it all back and more at some point. Make sense?
Absolutely, and thank you for that. You are really dropping some jewels for our listeners. Can you help our listeners understand how that gain of weight or loss of money happens when you aren't aware of the other forms of currency?
Most definitely. Let me give you some examples. I won't name and get either of us in trouble here, but the audience can figure out our subjects. The first is a prominent media mogul who built an empire, yet she struggled with her weight for decades. She gained and lost weight for years. It wasn't until our mogul learned through the correct information that her weight issues had nothing to do with her willpower and strength, but were more a condition of hormonal balances and appetite triggers. The new information was so eye-opening, our mogul ditched a longtime partner with a company known for weight loss products. New information leads to new relationships. She didn't make more money, yet she increased the satisfaction from her life, shedding the guilt that she was not disciplined and unable to commit to. Weight loss, after all her effort, was enough to grant her some much-needed relief. Our following example comes from the world of high finance. There was a man who fit neatly under the term robber baron. Robber barons are wealthy men from America's Gilded Age. This gentleman grew his wealth to over 3.5 miles in today's money. Most of us would consider that generational wealth. This gentleman's son doubled his father's wealth. I am sure you're telling yourself, well, Ty, how can this be an example of what not to do? As I finish this story, over the next 2 generations, over $8 in today's money evaporated. It took approximately 40 years and many bad decisions to lose one of the most immense accumulations of family wealth in the nation's history. From these 2 instances, we should learn that learning never stops and recklessness never sleeps. Our media mogul gained something far more valuable than money with the correct information. Our wealthy family lost an unfathomable amount of money by not leveraging the right relationships or investing in helpful information.
You couldn't have drawn us a better illustration of the importance of wealth in all 4 currencies and not just one.
There was more to your question. You initially asked about building wealth and building wealth of communities. We have answered the question of what wealth is and why it's worth building all 4 forms of currency: time, relationships, information, and fiat, money. Let's take a look at the next concept, community. How can one build community wealth without knowing what a community is? Typically, the gurus, shamans, and economic hitmen begin by talking about the wealth of communities with what they perceive as the good habits of the wealthy and the bad habits of the less than rich amongst us. These are good words, but mainly in an accessible form because they start with myths. Usually, they begin with the ideas of circulating a currency between neighbors and some notion of spending power by a particular group. And last but not least, the concept of financial literacy. Here's the truth on those subjects. 1, if you put a fan in a room that is 1,000 degrees and turn it on full blast, you will never cool that room. You must first stop the heat source and then displace the warm air with cool air so the fan can do its job. Here is my point. Spending money with neighbors will not create community, nor will it ever create an information exchange or build relationships. In other words, it's a pipeline without the underlying structure of the community, which is relationships and an exchange of information. It's the cart before the horse. 2, Spending or purchasing power are terms thrown around, and not one real economist can tell you what they mean. Specific groups may earn a certain amount of money and have attained a certain amount of wealth. However, this does not tell you when, how, or where they will spend those dollars or what weight each purchase will have. For these reasons, marketers and salespeople love these terms, but most find them unusable. A much better tool for measurement is what gets invested. Who invests what, where? If you tell me a specific group invests X numbers of dollars to each student, that is a value, or that group holds securities in a particular amount. Why is investment versus consumer dollars more valuable? Simple spending can all be in the form of non-discretionary portions of income. For instance, Community A has 1.4 T in spending power, but 1.2 T goes to food, clothing, shelter, and education. That community has little room to grow in its current wealth position. At the same time, Community B has $1 in spending power, and half goes to purchasing interest in local businesses, vacations, neighborhood upkeep, and infrastructure projects that will employ its people. Which sounds like a healthier community? Of course, it's Community B, so household wealth is a much better indicator of community wealth. Sticking a pin in household wealth, as we will return to that phrase. 3. I don't know where financial literacy originated, but it has been hard to remove from the lexicon. Most households need to understand what we bring in and how much we get to keep. The notion that any community is made up entirely of CPAs, and that is why they are successful, is absurd. Understanding your inputs and outputs is all we should expect from our neighbors. Even as we encourage active investment, plenty of people can keep track of the numbers and deliver them to us, and at that point, we can decipher a dollar in and a dollar out. For those so inclined, there is plenty of information available today. Literacy will never overcome the action of doing. Starting small and growing takes patience and humility, not financial literacy. Now that we have dispelled some myths about why communities do not thrive, let's discuss what a community is. Groups of people living in a specific area share common interests and interact socially. Communities are divided into even smaller segments called families. Without families and strong family structures, there can be no community in the sense of building wealth in specific geographic areas. Otherwise, the community can mean we share ideals and other binding characteristics. However, if I am correct, your question was more geared toward geography, which leads communities to become states and eventually nations.
Certainly I meant communities tied geographically, ethically, and morally.
Then, yes, we are on the same page. That kind of community begins with the family structure. It is a system that can lead to the support and backing of its members. Then we can get to circulating dollars, building household wealth, and literacy growing as the quality of information increases. But if you can't establish a hierarchy in your home, neighborhood, and community, you can't possibly hope to build the command and control it takes to create a thriving nation. It would be impossible.
That's interesting because I rarely, if ever, hear the gurus, shamans, and those looking to sell a holy grail break things down to the familial level to explain community wealth building. It's usually based on education, work ethic, or some other esoteric feel-good term, leading us to behaviors and habits as individuals.
The idea of rugged individualism is so overblown in society today. I can safely say no billionaire alive today gained the bulk of their wealth through individualism, nor is there any community made of singular, disparate individuals who are all doing their own thing. Family first, then community is the key to wealth building on a large scale.
No one is really talking about community wealth in this manner, holistically. Most people are talking in quick snack bite phrases that have us jumping from one quick fix to another. What do you suggest people do with the information you are giving versus what they hear on social media and other avenues?
Through this conversation, I have tried to go from the root up and give my opinion, which is an opinion on how I see life. I will provide you with a few bullet points and then say that I am willing to talk to just about anyone in any medium to discuss the hows. You see, mainly what you described in your question were the 5 W's: who, where, when, and what minus the how. I focus on the how. How is wealth built? Historically, wealth has grown through expansion and innovation in this country. America did not save its way to the wealthiest country on earth. It did not conserve its way to the most powerful nation the world has ever known. It grew its way there. Today, if I were a budding entrepreneur, I would not expect growth through consumerism. I would not browbeat my family and neighbors into buying my goods, services, and products. I would ask them for investment capital. I would like them to help me grow through investment. After asking my family for their investment, I would ask my neighbors, my community, and my nation. Is it easier to produce by capital raising your competitors and buying them, or trying to drive revenue to the point where you can gain their market share?
It seems much easier to acquire them with capital raises. But most of us know so little about raising capital in capital markets. Don't you need a bunch of special knowledge to take advantage of those markets, and aren't they closed to the general public?
Quite the contrary. The capital markets in America have the easiest and lowest barrier to entry to any other market system on earth. With little effort, anyone can build a corporation today, right now, in the next 20 minutes, and be open to accepting investment funds within an hour or so. You should ask an accountant or CPA some questions regarding specialized knowledge. Overall, depending on the jurisdiction to incorporate, it will cost you a robust $300 tops. Now, there's also crowdfunding, fund managed raises, and, of course, public finance in the form of IPO, initial public offerings, which, by the way, 20% of the traded stocks in this country do not do so on the Dow, NASDAQ, or S&P. What that means is a smaller, community-based business can sell stocks to their community members in various ways that have nothing to do with the major exchanges or the steep regulations they represent.
I think the complexity and seriousness of what you just said demand a much deeper and introspective discussion on the topic of fundraising. With that being said, I want to thank you for your time, sir, and I certainly hope we get to delve into parts 2 to 5 very soon. I know at least 5 parts are warranted after this edition.
I hope that I have 5 editions worth of value for you and your audience, but I am certainly down to try. The pleasure was all mine, and until next time, I wish you all the best.